All right, hey there, Sam with you here on midday, Tuesday, March 20th. And again, per members' request in the voting that we do every day, with the second coin up for analysis is Litecoin to the dollar. Now, the request was to look at it on Bitfinex. So I have it up here. This is a 4-hour chart, Litecoin to the dollar on Bitfinex, and there's some interesting things to take a look at here. Now, certainly no surprise here that we have a similar pattern to Bitcoin. So a few things to take note of here to try and get a handle on this. So, so that we can see the 5-wave sequence here, and we've been in this correction here. So there's a couple of different scenarios here. So the obvious thing to consider is just working from the swing low to the swing high. You can see 786. It's pretty damn near to the tick if I get it right on there. So we go so just like Bitcoin, right? So both tick the 786, which really, you'd consider that a last stand for the bullish count if this is going to play as a 1-2. If we do have that, which again like Bitcoin, we can't confirm it, but certainly warming to the idea. We've got the potential here for now this to go up into 345. We know the likely target, as I've shown you guys many times. And this is just a shorthand way to get a look at it, would be the negative 100. It would be very close to the 1618. So if this is going to play as a 1, 2, 3, 4 and up for a 5, then we're off to new highs. If we're going to unfold that way, again, a lot has to go right. A lot of things have to happen, but that's certainly all of the ingredients are in play for that to be the case. So what we want to do is try and build as much evidence as we can for these significant pivots. So you can see here, swing low, swing high. We came right into the golden zone. We got the reaction, but then it rolled over again. So very similar to Bitcoin. And then down we go. And as we're heading to that level where, that's where the bears are just, Litecoin's going to $20. I hear all of it. I see all the comments, and I get a lot of people giving me their opinion about it. But there's a few things here. So let's take a look here. Now, one thing that we can see here, there was very clear evidence, again, it's very much like Bitcoin, that we had the ABC. It's the deep correction of the entire move. And here's what's that, $30 down here up to our high was 371. Well, a very deep correction, no doubt about it. But you can see how technically well it played. So we get the big A, 3-wave into the B, and then we come down in this 5-wave structure down here for this C wave. And as would be no surprise here, it's very technical. So we just take the length of the 2 to the 3. Here's the algo targets to the tick, right? So again, nothing fancy here, just a significant pivot. Now it helps us as Elliott traders to get that in the context of this being a 1-2. We expect the 3. Here's the 4. It's deep for the 4. There's the 50, the 618. We don't get just beyond the 50, but then we rip down. We get to the algo target to the tick, right? So obviously algorithms are in here. So, but that's just, confirming it for you if you had any question mark in your mind. Well, we come off of that low dramatically and we go impulsively. So up we go for a 1-wave. And we come down here. So we look and say, okay, wait a minute now. Can I see any similarities between these two? Because just right off the bat, here's the first thing that I see is that it looks to me like I've got an A, a B, and then it looks from this B here, I go into a very similar kind of 3, 4, 5. So I'm going to take this off for the time being. So I see this 3, 4, 5 down here. I've got them in the same color here, unfortunately. So 1, 2, 3, 4, 5 off of the ABC. Then potentially I've got this as a 1-wave. So here's a 1-wave impulsive 5-wave structure, clear 5 waves up. And then if this is playing as an ABC, then we're getting this as an A. Here's the perfect 3-wave B, and then we're coming down for the C. So let me change that color, and we'll go up a degree. Excuse me. Go up. We'll go to menu. That'll work. Okay. So if that's A, right? So there's the classic straight move down, and as I've shown many times. If I can get that right on there. the A wave is often right to the 50, right? So the little front run here. So algos, there were algo buyers there. Push it up, can't get it there, it rolls over. That's what creates the B. See, so it's always the potential. So a B wave is often it's the potential for a 1, 2, pushing for the 3. It can't get there, and when it rolls over, then you get the big sell-off. But we come down in 5. So A wave here, and then you can see that. So here's the first reaction here, the front run at the 50. That's just standard algo operation. Then we get into the golden zone. They kick it up again. They still can't get it over. So we roll over, and where do we end up? So you can see here we have essentially tagged, here's the 50, the golden zone, last stand 786. I actually have the 887 on here. We can take that off. That's an absolute extreme to stay internal, but swing low, swing high, we stay internal despite the depth of it, and we get this similar kind of pattern here. So if I take that off, we can see that it wouldn't be surprising here that if I look at my if I get right on my 2 to my 4, so algo target, right? So very similar to this one, not quite to the tick, they get through it by hair, but if I take the length of my 3, it goes deep for the 4. So we don't end in a diagonal. We don't overlap the 1. So it's deep for a 4, but bang, bang, bang. 3 tries at the 618. It can't get there. Down they go, and they hit their target, right? And they get a little extra juice on it. Now we're getting this reaction. Okay, so could this be a one wave? Does this make sense if we look at this in a larger degree? So for bulls, again, it's much like Bitcoin. Can that play as a 3, 4, 5? Let's get that degree up so it makes sense. Go to intermediate. Okay, so this is a contender. Very, very much a contender now for a new trend to be underway. We've had the major correction. We had the 5-wave impulsive come off of it. We came down very technically. We went deep for a 2. Last stand 786. Now we've got the reaction. All right, so let's think about a couple of things. So with 3 pivots, of course, we're going to want to put a pitchfork on it. So I'm going to go here. There's my 1. There's my 2. Now I've got a modifier. We can go to original recipe here. We'll go to original. Okay. Now let's look here. Okay, so potentially now we have a corner pocket trade that's in play. We know that, given much research and Andrew's discovery, we have an 80% probability of getting to the median line. Now, do we get it here? Do we, here? We don't know when we're going to hit it there, but we have 80. Now, for the qualifier here, if this pivot holds, right? If we don't go back and we head down to new lows. If these 3 pivots hold, we have an 80% probability of making the median line. Right? As I often say, where else in trading do you get those odds? The answer is you don't. You don't get them anywhere. So anyone who's not using a pitchfork is just, why would you not? Why would we, given those odds? Why would you not put a pitchfork on every 3 pivot that you could find in the market? Right? It's crazy not to. As a matter of fact, let me just to make the point. Now remember, it's a bit of a, you got to try and find it because the algorithms are going to use it as well. And this was down here as well. So you look at that one and you go, oh, wait a minute. What happened there? Well, you could say, okay, well, classic Andrew's trading principle number 4 is that if you don't, a failure to make the median line sets up a move equal to or higher or greater than the move that failed to get there. But you got to look at the modifiers as well. When it's too deep like that, so if we go to shift and we look at that, pretty close. Then we go to modified shift, and that's right to the tick, right? So pivot, pivot, pivot. We get this, right? Damn near to the tick. So you want to look for those. I mean, you're crazy not to, right? So here's the corner pocket trade on the way down, right? So from this pivot, right? So pivot, pivot, pivot. We've got 80% probability. Don't get it, don't get it, get it. 80% odds of catching that to the median line. It's a return to the mean, right? So that was a perfect trade. And pivot here, now we're getting this reaction. So here we know that'll be some resistance to try and get through that. But working back the other direction, now I've got 3 pivots. I want to look at that and say, okay, well, I know that was significant. There's my 1. I know that this is significant. Now, again, I'm going to go back to original recipe here. So let's go to original. And I know, so if I'm going to start to project for this, so I'm going to look and say, okay, if this is going to play as a 1, 2, which is what bulls are looking for, get it right on there. Okay, what's significant here? So first thing we got to get to. So first, if it's going to play as a 3, we got to get to 100% the length of the 1. That's all we have to measure against. So we'd be looking for this. That would be a minimum requirement to play this as a 3. 100% the length of the 1. So can we get there? You know, is that the 3? Well, it's possible. You know, you might see something like that where you're getting a reaction from the median line, which we know is very characteristic. That could be the 1, 2 of the 3. If the 3 is going to be up here where we know we can project, we know this zone that's our target for our third, that high probability zone, 1618 to 175 window. Well, you can almost see it, right? So I mean, if we were to get to the median line and bounce, then you know we've got the potential here for us to go 1, 2 into the 3, then 4, then maybe back to the median line. So you can kind of start seeing a potential roadmap. But you know, we're getting ahead of ourselves. But that's all potentially there. But first thing is, can we move away from that pivot that we know is significant down here? Can we get out of that impulsively to start building the case for this to potentially be a 1 wave? And on this degree, that would be a 1 wave of probably the 1 wave. So let's dig down a little bit deep, but for large scale. So always good to have. Well, you know, I will typically defer to both the daily and the 4-hour for my longer term, but that's a good working structure to have in play, at least somewhere. Now, we know for sure we're going to run into resistance on the way back up. So if I take this swing here, all right, so we know we've got the 50 and the 618 to get through, right? If we're even going to have a chance of getting to the median line. So that's the resistance. We know it's going to be there. Right, it's just all we've got is 2 pivots here, so we know algorithms will be written to sell the 50, defend to the 618. If we get through, they'll flip, then they're on our side if we're bulls. So now, given that, let me take some of this off because we know this is up here, so we don't need all that on. So let's get this off. All right, so we'll go down. Let's go down to let's go to the 1 hour next, and see how we're looking now. Get this down here. Actually, I'm going to take that off just so we declutter the chart. Okay, 1, 2, 3, 4. Yeah, there's our 4. So we, you know, it's not the cleanest. It looks like we got 1, 2, 3, 4, 5. So it's there. So it looks like if I had to dig into it, if I can get that hot, I'd be 1, 2, 3, 4 down for the 5. Now that degree is silly. Let's get to, okay. So potentially here now we end. That's the deepest retracement here. So that would be 1, 2, 3. Looks like 3, 4 into that 5. So if we look at that now, so this will be significant. We've got to get through all of this resistance on the way back up. So now we look in here and go, what do we got? Look, it's not unlike Bitcoin. So we got to go down to I got to go all the way down to the 15 to here to get a handle on it. So 1, 2 looks like 3, 4, 5, almost identical to Bitcoin. So if I go here, there's my 1, 2. Looks like we're playing 3, 4, and going up into the 5, right? So if we start to think about that, let me open it up here. So here's our other 5th here. That should probably be higher degree. So let's go to this, and we'll take that degree up just so it's consistent here, and we can go to submicro. Okay. So 1, 2, 3, 4 looks like we're up for that 5. So we can do a little projecting. Now we can look at this and, you know, we're getting a little hot there. Let's do just some basic. So we'll take our 2 low just like we did on the way down. And what do you see? All right, so it's shallow, so it's a front run on the 38. We've run right into the algo target, and look at the resistance. Again, it's not rocket science. It's just, having a little Elliott knowledge here is valuable to us because we know there's a tendency. We know the highest probability zone for a 4th is between the 23 and the 38. Can go as deep as the 50. We just saw it on the way down. It can go to the 618. But these are the high probability zones. And given that we get this 3 wave, it's kind of a sideways action. It's very characteristic, excuse me, of a 4th. Excuse me, guys. Okay, so up we go to the algo target. bang, we get a reaction. Now, that doesn't mean that we must stop there, because you can look here. If we dig in here, we can see there's a little 1-2. So again, just like I showed you on Bitcoin, there's the possibility here that we've got another leg up to finish this. So we get a little 1-2. There's the 3. Looks like we're going sideways here. One more up for the 5 to potentially give us here a nice impulsive move off of that low. So let's take that up. We'll go to... There we go. So all of the ingredients are there for that to play as a 5-wave impulsive move off of the technical pivot, the perfect tick of the 786, the 5-wave structure. So we've got pattern, we've got price, we've got everything we can look for. We've got confluence of fib zones, we've got algo targets. I mean, you know, what more can you ask for, right? So now working off of this, if we've got one more little kicker up here, well, we know that all that's happening here is that we're getting our first impulsive move off of this. Now, I'm down on a 15 minutes. Let's go back. I'm going to go to 30 minute. Okay, so we can look at this and say, well, we know that there's a very high probability here. At some point, we're going to hit a pivot and we're going to start the retracement for a second wave. So if you're not in this, that's what we're waiting for. So right now, it's a hurry up and wait. If you didn't catch any of you didn't catch the 2, didn't catch the 4, and you're not in. Now, I would not advocate trying to catch in here, trying to get the 4 or 5. There's not enough juice in it. There's just not enough there to warrant the risk. So if you're not in now, you're playing hurry up and wait. We're looking for a pivot up here that we can start working with so that we can start projecting from the low and look for retracement. So now I'm hypothetical here. I'm just using the point of control here on the volume profile as a candidate here for our 5th. If we start coming down, well, we know we want to be looking for reaction at the 50 and the 618, because there will be algorithms that will be written to buy the 50, defend to the 618. They flip on the other side. So we have a candidate here setting up for this to have moved impulsively off the low. We'd be looking for a 3-wave correction of that impulsive move with entry zones here at the 50 and the 618. So that's, you know, it's very similar to Bitcoin, no surprise. All right, so we'll see. Now we know there's resistance we got to deal with here, coming back up. So you want to have this noted and marked. So if I work off of this pivot here, I'd actually use the highest pivot. Okay, well, again, it's very similar to Bitcoin. We're coming up to the 618. So let me take that off because that's just our hypothetical. We don't know where that is going to top. So this is all back off over here. Okay, so 1, 2, 3, 4, 5 running into this resistance. But you're going to have to check every major pivot on the way up, right? Those are all candidates, algorithmic candidates for resistance. You don't know what they're using, so you got to pull here. Well, that wouldn't be surprising, so we got to get through that. And then this, which was the B high, right? That will be significant. So there's our A into a 3-wave B, so that will be significant. So here would be a big one for us to get through. So that's 194, we'll call it. So, you know, I would be surprised if we got there in this move. Now, we might get the 50. We might get that. But at some point, there's going to be a profit taking or whatever reason, whatever causes it, you don't know. But there'll be some sort of a retracement, and that will be the next opportunity to get long, looking for the 1, 2 into the 3. Right, so that's a pretty good look at it, knowing all that resistance is going to be there on the way, starting with this one. Right, working from that highest pivot. Can we get through? If we do, good sign, but then you got to check the next one. Can we get through? If so, good sign, but then you got to check the next one. You got to keep checking these on the way back. And how will that dovetail in with those zones that we're anticipating for this pattern to be, you know, essentially running out of steam? So we're here, we're playing this as a 4 here. I wouldn't assume an extension in the 5th. So just a typical, the typical symmetry that you might expect here. Excuse me, guys. What might put us up into the 50, we get lower volume node here. This is interesting here. We're right in this little pocket here where we've got a low volume node, and we're running into a little resistance. Can we get through it? You know, we'll wait and see. But the next trade is waiting for the 2, waiting for the retracement. Whenever this peaks and we start the profit taking, or, you know, again, whatever you want to, however you want to quantify it or qualify it or rationalize it, whatever causes the move to retrace, that's the next opportunity. So we wait and see. We wait for it. All right, two things. I mentioned this in the last video as well. Just a reminder that for those of you that are interested in, at the very least, diversifying into other assets outside of just crypto, we get a lot of requests for this. So we're starting a new channel that will be under this. So it'll still be on this channel. It'll just be sort of a new category. So we'll be doing traditional markets. So we'll be doing equities, futures, and Forex for people that want to see this methodology applied to those markets. Nothing changes. It does not matter what the asset is. You approach it exactly the same way. And I think a lot of people will get their eyes opened as a lot of people think this is somehow related to crypto. It has nothing to do with crypto. This is just how the markets move, at least as we sit here in March of 2018. Until that changes, this is what I would tell you is the right way to approach the markets. Right? Doesn't mean it's perfect. Doesn't mean we don't get stopped out all the time. That's about money management. But if you want to analyze how the market moves when it moves, I think this methodology will serve you well, right? That's what I try and do in these videos, is kind of prove it out to you. So look for that. The other thing is I get a lot of requests. People are looking for coaching or trading or mentoring of some sort. So we've made that available. So you can go to our website at tradedevils.com. Well, of course, we have the regular monthly membership where you can access the members Discord, which is very, very active. So that's one option. The other is if you want that one-on-one personal attention, that is something that I offer. So you can read about that. We do it by the hour. So you can read about that also on tradedevils.com. Okay, guys, I'll wrap it there for the day.